Hi, welcome to vidyabhyasa.com. Now we are in second chapter with respect to a business studies paper. Uh, the title of the chapter is Forms of Business Organization. For the sake of convenience, we have divided this particular chapter into four videos or four parts. In the first video, we will see like what are the various forms of business organization in brief, and then we will discuss what is sole proprietorship and joint into family business models. And in the video 2, we will have a detailed discussion on business partnership. And in video 3, we will have discussion on cooperative societies. And finally, in video 4, we will discuss joint stock companies. So let's look into various forms of business organization. See, doing business is changed from time to, like, it is massively changed. It's very difficult to run a business from by one person. So it requires huge capital, it requires huge expertise. So based on the business funding requirement and the entrepreneur's risk-taking capability, he can select any form of the business organization. Here are the few forms of business organization which people are using it. One is the first one is a sole proprietorship. Sole proprietorship is nothing but a one person business where one person invests the business and he runs the show. And in the next one is a joint Hindu family business. Joint Hindu family is a form of business organization which is prevalent in Hindu in India. This is the family of one elder member will be taking care of the business, like elder member and his sons may be 3 to 4 and the sons. So any member who born in that family will become automatically a member of the business. And there are two parts of it. One is Dayabaga School of Hindu JUF, and then Mitakshara School of HUF. So this we will discuss when we were talking about joint Hindu family business in detail. Next, we have partnership. Partnership is a form of business organization where few people come together and they start a business. So it is a difficult for one person to arrange a capital. So once two or three like-minded people come together, then it will be they will be form a partnership firm and then they will do a business. So there are various rules for partnership firm and it is governed by Partnership Act. So those things we will discuss in the partnership video. So there are various types of partners. Active partner who is actively involved in a business. Sleeping partner who will contribute and then he don't take any part in running a business. Secret partner who invest money and his name will not be uh, declared outside. Nominal partner who is only for a profit. Partnership by estoppel. Partnership by holding out. So like this, there are various types of partnership available that we will discuss in detail in partnership video. And the next one is cooperative societies. Cooperative societies, these are the group of people who come together to protect their interest. For example, consumers cooperative society. Instead buying it, all the consumers come together and they buy at a wholesale rate and then they share the goods. So like in a locality, if there are 25 guys are there, they come together and they go to a market and they buy in a bulk. Always when people buy in bulk, they get a discount. So the next one is producers cooperative society. If there are very small producers and then they can come together, because if it's a single producer he has to incur a transportation cost from his place to a marketplace. If there are a group of producers who come together, they can use a one truck for sending all the materials of all producers. So with that they can reduce the cost of marketing or cost of innovation or various things. So the next one is marketing cooperative society. Like a producers cooperative society, this is also like inside each individual spending a time for marketing and cost for marketing. So the collective team will from a producers will work on marketing for all the products of small producers. Farmers Cooperative Society. This is a society for farmers who grows food grains and vegetables. They can now form an association and look for a better price in a market. Credit cooperative societies. This is for people who wants to get a credit at an credit from a bank or from a financial institution. They can come together and form a society and then contribute the capital, then start looking for and taking a loan from a societies. And housing societies, if multiple people who wants an house, they can form together and start building an housing layouts and societies. So these are like societies which are created for a specific purposes, and this is governed by Societies Act. The last one is joint stock companies. The joint stock companies are like where public from across the country or out of the border also they invest the money in it, and they will and the promoter will use the amount or an entrepreneur will use the amount and he will distribute the dividend. This particular thing we will discuss in detail in joint stock company video. There are two kinds of joint stock companies: private company, public company, and there is also one man company now. All these things we will discuss in detail in a subsequent videos. Let's move to a sole proprietorship. So to summarize what we discussed, so business entities can be established in any one of the form based on the entrepreneur's choice. Each form is governed by a respective act: HUF Act, Partnership Act, Cooperative Society Act, Joint Stock Company Act. With respect to sole traders, there are very minimum laws are exist, but other forms of business are governed by an act in India. So let's move to a sole proprietorship. This is a business which is run by a single individual. Is a one person business entity where he will invest the entire business and he takes the entire business decisions. So single authority, only one person is entitled to take up all the profit and absorb losses. If there is a huge profit, the entire profit will go to one person because he is the one who has invested the money in it. If there is a loss, he has to suffer the loss. Only one person liable to pay all the debts of the company. Understood? Like every debt of the like any debt or any loan of the company should be paid by this particular single person. Simplest form of business. Yes, this is the simplest form of business because there is no other acts are established for a sole proprietor. Is a one person, the quick decision, no legal formalities or a minimum legal formalities. He goes and he can anyone can start the business immediately. Sole proprietorship is suitable for small businesses because one person it is very difficult to arrange a fund for there's a large business engagements. So the single person can arrange the funds which are suitable for small businesses. The best examples are the shops which we see across our neighborhood is a best example of sole proprietorship. Let's look into a characteristics of sole proprietorship. It's the simplest form as we discussed. The few legal formalities, there is no complex legal formalities to set up a sole proprietorship. Unlimited liabilities. So any kind of loss and other thing happen, the single person has to pay all the losses, like all liabilities to the loan provider and other things. So because there is no limited liability concept in sole proprietorship. One person control. The entire business is controlled by one person. So as there are no partners or anyone to interfere in the decision making, so he can take a quick decision, not an separate entity. From a legal perspective, right, all his income will be treated as an individual income. So it is not a separate entity. Lack of business continuity. It means if anything happens to the single proprietor or a sole proprietor, then the business will get closed. There will not be any continuity of business. In case of joint stock companies, if promoter dies, the other persons will take it forward because shareholders runs the business there. So here, a lack of business continuity is one of the feature of or deficiency in sole proprietorship forms of business organization. Limited capital. Generally, there's one person can arrange a capital of X amount based on their strength. So the capital, like setting up a large industries, are difficult with a sole proprietorship forms of organization. Income tax applicable as individual. See, there is no separate income tax rates applicable for sole proprietorship. All the individual income tax rates are used in sole proprietorship businesses. So let's look into a few advantages and disadvantages of sole proprietorship. Advantages: it is easy to form the business, small capital, quick decision making, full confidentiality of business information because everything you will be knowing it and there is no need of there is no worry of uh, sharing this information to anyone. Direct incentive: if the company makes a profit, if a business makes a profit, the entire revenue goes to or entire profit goes to sole proprietor. Sense of accomplishment: because the entire business is managed by one person, if the business achieves success, he will be more happy. And no need to publish financial report to external parties other than government agencies. See, when anybody does a joint stock company or a society, they have to publish the report and it should be audited. But in case of sole proprietor, there is no need to submit or publish financial reports other than government agencies like taxes. For filing an income tax return and other things, they have to file it. Otherwise, there is no need to publish a financial reports to public. Disadvantages or limitations of sole proprietor: limited capital and resources, because one person you will not be able to hire a professionals or or you will not be able to expand the business faster. So that's the one advantage. Lack of continuity. As I told, if anything happens to a sole proprietor, the person who can take that business to a next level is difficult. Unlimited liability. In case of loss it is suffered, entire loan has to be repaid by only one person. These are the limitations of sole proprietor, and we discuss advantages and we discuss characteristics. Let's move to the last one is here: limited skills and managerial capability. Because hiring a professional will cost more amount because of the limited liability and the limited capital. It is very difficult to hire many people there, many experienced people into the business, and the one single person may lack in some managerial capabilities, so that will also cause a negative to a sole proprietorship firms. If a person is dynamic and having excellent managerial capability, then it's fine, but in many cases it lacks managerial capabilities. So the next one is Hindu undivided family. As I told in the beginning slide, this is a form of business which is found only in India. It is popularly called as HUF, Hindu undivided family. It is one of the ancient form of business in India. The family members of the family run the business as one from a generation to generation. It is a business which is run by family, and from generation to generation the membership passes on. It passes to a both male and female. Let's see some characteristics. There is no contract among the members. It is not a legal person or like a joint stock company. There is no contract between any members. By the virtue of birth in that family, they will become a member of this business unit. It governed by Hindu Succession Act 1956. It is governed by Hindu Succession Act 1956. To form the Hindu undivided family, minimum two members are required. At least there should be at least one male member. Karta, elder of the family, is called as a Karta and he controls the business. Entire business will be run in the name of Karta. Okay, and other members of the family are called as co-parceners. Okay, other members of the family are called as co-parcener and the elder member of the family is a Karta. The entire business is controlled by Karta. And minors can also be a member of Hindu undivided family. Liability of the Karta is unlimited here. The important point with Hindu undivided family is liability of the Karta is unlimited. Equal rights in sharing the profit or losses. Every member will have equal rights in sharing the profit and loss. There is no need of having that this person will get 10%, this get no. As a family member, he will be eligible to get a equal amount of profit or losses. Business continuity is not affected by the death of a family. So in case of sole proprietor, if there is a death of a sole proprietor, the business will not continue. But in case of Hindu undivided family, if in case of a death of a Karta, the next senior member will take care of the business. So next elder member will take care of the business. This is all about characteristics of Hindu undivided family. Let's look into advantages and disadvantages of Hindu undivided family. Easy to form and manage because uh, every person who born in that family will become a member, so it is very easy to manage it. Again, individual or one family, there is an limited amount available here, but that will be like the entire risk can be easily identified and easily managed with because it involves only a small capital there. Quick decision making because Karta is an elder member and he is a decision maker, so he will take quick decisions. No outsiders are involved. Another advantage here is the limited liability for other members. Karta's liability is unlimited, but other members' liability is limited. So I hope you people know what is limited liability and unlimited liability. Limited liability means in case of closing out of business, all the assets, but the liabilities are around 1 lakh rupees. But when they sell all the assets of the business, we get only 50,000. So end of the day, company will pay only 50,000 to all their creditors and loans, bank loans, and the rest of the 50,000 will be written off. In case of unlimited liability, person should get the money from his personal properties and pay that the balance amount. Full confidentiality of business information because it is a one family which manages the business, the entire information are kept confidential to the business or family itself. Direct incentive, whatever the profit earned, it will be shared among the family members only, so it is a direct incentive to all the family members. And continuity of the business is not affected by death of any member dies, the business will keep on continues. And like a sole proprietor, there is no need to publish financial reports to any external parties. It should be published only to tax authorities and other government agencies. Few disadvantages, limited capital. So to arrange a huge capital is difficult for one family. So expanding business and other things will get impacted. Unlimited liability for Karta. So Karta's liability is unlimited here. Generally, everybody looks for unlimited liability kind of forms of business. But in case of Hindu undivided family, Karta's is unlimited, but co-partners liability is limited. Limited skills and managerial capability, yes, because it is run by only one group of family members. There may be a lack of some expertise or a management capabilities among these members. Dominance of Karta. Sometimes right, Karta is having entire power in this business, so he may dominate and he may take a wrong decisions in some business related activities. So this is all about into undivided family. Let's look into forms of Hindu undivided family. There are two thoughts of Hindu undivided family. One is Dayabaga school here, and the second one is Mitakshara. Dayabaga was popular in West Bengal, and Mitakshara was popular in rest of India. As per Dayabaga school, both male and female will be a co-partners. Both for male and female will become a co-partners, and as per Mitakshara school, only male members will be co-partners. So that's all about Hindu undivided family. Let's look into a few multiple choice questions and then we will close the session. Business run by single individual is known as sole proprietorship. Which of the following is not true with respect to sole proprietorship? It is simple to form, yes, correct. Multiple people to fund the business, this is wrong, right? And unlimited liability, few legal formalities, all these are features of uh, uh, sole proprietorship except multiple people to fund the business. Which one of the following is not an advantage is associated with sole proprietorship? Easy to form, yes, it is an advantage. Quick decision making, it is an advantage. Direct incentive, yes, it is an advantage. But suitable for large scale investment, no. See, sole proprietorship is not suitable for large scale investment. Minimum number of members required to form Hindu undivided family is 2. Name the two schools of thoughts in Hindu undivided family, Dayabaga and Mitakshara. Head of the family in HUF is called as Karta. Which of the following is not the characteristics of HUF? Minimum number of members required is 2. Head of the family is known as Karta and his liability is unlimited. Minor can be a member of HUF. Legal agreement exists among member. The last one, legal agreement exists among member, is not a part of HUF's characteristics. Thank you. We value your feedback. Please write your feedback and contact at vidyabhyasa.com.